Welcome back to another enlightening episode of MH Knows, or She Knows Someone Who Does. I'm your host, Marianne Holt, and today we're venturing into the realm of financial planning with a captivating guest who is a true luminary in his field. Curtmay is the creator and owner of the Practical Wealth Advisors, PWA, and host of the Practical Wealth Show podcast. The primary focus of his financial planning firm is to help individuals and families become financially free by allowing the principles of wealth creation that has endured for centuries around the world. As the host of his popular podcast, The Practical Wealth Show, and in his individual meetings with clients, Curtis teaches people that their number one financial asset is their knowledge. The more they know, the lower their risk and the greater their chance of success over time. He feels strongly that financial products are simply tools. What makes the biggest difference in people's lives isn't the product, it's how they use it. Curtis has been planning for individuals for more than 35 years, and he is passionate about helping his clients save money and live the very best life they can right now. Curtis is also very blessed to be married to his wife of 22 years, Erica, a family law attorney. They like each other so much that they even share an office together. Curtis and Erica have 3 amazing daughters and love to travel. So in the world where financial independence and control over one's hard-earned money are more crucial than ever, Curtis's expertise is a beacon of hope for business owners, investors, and families seeking to secure their financial well-being. Listeners, prepare to be inspired as we embark on this enlightening financial exploration with Curtmay. Get ready to gain insight that can empower you to take control over your financial journey. Curtis, welcome to the show.
Hey now. Hi. Thank you. I almost feel important.
You are. You've helped so many people. As I was saying earlier, listeners, he and I were talking offline. I've known Curtis for a very long time. I met him in 2008 when I was a housing counselor, and he has been talking about wealth building and becoming your own bank for as long as I can remember. And so I wanted to bring him on the show as homeowners, as first time or people who want to buy homes, as landlords, investors. You know, you guys might want to learn how to manage your money if you don't already know how to do that, and how to build wealth and how to use your money as the bank. So that is why Curtis is here. I wasn't able to prepare questions with him because he does, his mind is like he does so many things, and I'm not sure exactly what to ask. So we're just going to have a conversation, and then we're just going to pull it out of him. So hopefully I'll get the answers you want. I get the questions you want to answer. All right. So Curtis, let's dive right in. Your approach to wealth building is something that's been going on for, like you said, centuries, but you have a unique way of implementing your strategies and teaching people how to actually do this. So how'd you get into this, and how did you create that program that you have?
Well, there's nothing new under the sun, okay? And I ain't got no original thoughts, okay? So let's start with that, right? So I read a lot, and then what you do is you do stuff and you build frameworks, right? You try stuff, and so what I've learned to do, what not to do, and so I've been doing this since 1985. I actually started, I want to say, my junior year in college.
Okay.
Somebody showed me a check for $400 this, so I made 4 hours worth of work. I was like, what? In my mind, this knucklehead could do it, I could do it. And then I just, being the nerd that I am, I realized the NBA 1 was not looking for 5'11" two guards, right? So I I says, okay, I need to make money. I never wanted a job. My dad always told me you never make money working for somebody else. So I never got that go to school, get your education, get a good job taught. He always told me you never make money working for somebody else. So I was able to combine money and a business working with money. In my mind, if you want to make money, if you work with money, some of it's got to spill on you. Okay. So that was my philosophy now. And the first 12, 13 years of my career, I was kind of like Dave Ramsey on steroids. I termed the divestiture difference, max out your 401k. And then around 2000 or so, I read Rich Dad Poor Dad.
Mm-hmm.
And I realized, okay, what I'm talking about and what he's talking about is different, right? And rich people and middle income people planning is different. And I kind of saw it because my dad had always been in business, so he thought differently about money than what we were teaching. So it started to come together, you know. And so principles based planning is just my framework now is I teach principles that help our clients become and remain financially free. So if you study the Buffetts, the wealthy people, or if you read things like The Richest Man in Babylon, that's based planning, right? So that all I teach is chapter 2, the 7 cures for a lean purse. Basically, if you boil it down to what I teach, part of all your earnings yours to keep, budget thy expenses, manage cash flow, make your goal multiply. From your savings, you need to have capital to buy or build cash flowing assets, right? Make of your home, to your point, a profitable investment. Guard your treasure from loss. Put money where you can't lose it. Only put money in things you understand, because the investing is not risky. Being uneducated is risky.
Okay.
All right. Ensure future income. So buy cash flowing assets. So it's like if you're listening to Marianne, what I teach is that, listen, there's 4 asset classes: business, real estate, paper, and commodities. And so if you're doing real estate and you want to retire, why don't you use real estate as the asset class versus stocks, right? What if you could net $400 or $500 a month on a property, and buy 2 a year for the next 5 years?
Okay.
Right.
Okay.
So the asset class. So if you look at the Forbes 400,
Mm-hmm.
who's on that list? They build businesses.
Okay.
They take the profits from those businesses and they buy real estate.
Okay.
Why? Because they use debt as money, and then buying the real estate properly, especially if you're a professional, can zero out your earned income. Get with your tax person. I'm not giving tax advice. They buy paper.
What's paper? What is the paper?
So paper is not tangible stuff. So most people think paper, when they think investments, they think mutual funds, max out my 401k, savings accounts, CDs, ETFs, but paper is bigger than that. Okay. So we talk about on my show and what are some of my clients do. I get clients that do private lending. So they're really strong savers, and they are the equivalent of hard money people. They'll loan money out to real estate investors with the real estate as a security, and they might get 8, 10, 12% on their money.
Okay.
Secured by property and cash flow, right?
Okay.
I got clients that do life settlements where they can, I've had a guy on my show, and you can invest in insurance policies of like people that are 89, 90, and, they sell their policies to this fund, and, it's nobody on there that's not going to die. So you're going to get your money back.
Okay.
But you don't even know they exist, and they're older than the mutual fund industry. It's just, it's hard to win a game. You don't know the rules. There's tax liens I've heard of. I've got clients that buys notes. So instead of buying real estate, they buy the mortgage. And so when people pay the mortgage, that's your money because you own the mortgage. You own the note.
Wow. Okay. You said something about they buy insurance on people over 80 because they're banking on them dying. I mean, what is that?
Yeah,
what is that?
Let's say somebody, this is a rudimentary stuff, but they're out there. I got a show with what is the guy's name? Kevin Nichols from Penumbra Investments. You have to go back and search some of my older shows. But basically, the concept is that a lot of these seniors, don't at this point they don't need the insurance or they need the money, so they'll buy them as a percentage of what the death benefit is. You can sell it. Insurance is an asset.
Okay.
They buy it.
Okay.
They make the premium payments and they sign over the death benefit to the fund that bought the thing, right? So everybody's happy. It's a win-win. They get upfront money. They need the money now. And then what you're doing is you got patient money and you're buying that. And then if you buy a fund of those, and then, you have a series of liquidity events and you can get a pretty decent, high single double digit rate return on that asset, but
Oh,
you got to
okay.
have money though. It's like you need like $100,000 to get into it. So I mean, it's not like, oh, I got $500. Can I buy into it? No.
And that was my next question. So, what if, let's say they have $5,000 to invest? Would you be able to, maybe not that, maybe not what you're talking about, but if they had about $5,000 to invest and they contacted you, would you be able to introduce them to some type of tool that would help them invest? Or,
let me ask you another question. Is that all the money they have?
This is a hypothetical, yeah.
Right.
Yeah.
No, nothing, because I wouldn't let you invest. If you don't see what can I shoot with $5,000-$10,000? Go take a course. Go read a book. See, investing is not about buying something. It's about becoming something.
Okay.
So here are my 3 rules of investing. Invest in what you know, or invest in knowing. Okay. Invest in what you can control, invest in what you can influence the outcome of, and don't chase returns. So those are my 3 principles around investing. So most people are like, what should I do with? But you're not asking, how do I become a real investor? How do I become a real estate investor? We want the easy button and we just say, hey, I got $5,000. What can you do? Well, nothing, because you don't have any money yet, right? Because most of the so in with the what's that thing called? The life settlement, you have to be either accredited or maybe a sophisticated investor, and you need at least $50,000 to do that. So that's why the first thing I teach is save. Part of all your earnings is yours to keep, because the basics are I teach 6 to 12 months of liquidity. Now you don't have to wait that long, but if you don't have like 3 months of your income cash, and we store them in insurance, that's another strategy. But if you ain't got 3 months of income, you don't talk about investing. You don't have any money yet. You don't have
any
money. You can't afford to lose.
Okay. Well, then let's back up. Let's say that person isn't ready to invest and they come to you. You said that they needed training. Do you put them in some sort of course?
I do. I have joint ventures with people that, so if you say, I've had a couple people that are really successful real estate investors, that one for beginners, one for a little bit more advanced. And they all make a lot of money, hundreds of units, they do coaching. So it's like because see, what I do is I'm the defensive coordinator, right? So it's offense and defense.
Right? Okay.
So what one of the things I teach, because everybody wants to jump right into investment because they think that's the first thing you need to do. I'm going to argue if there's 5 things, investing is number 5. That's what people don't understand.
Okay.
And so you have to, because you don't have a solid foundation. So you're still hitting for home runs, chasing returns because you feel you're behind the 8 ball, right?
Okay.
And so you got to block and tackle, meaning that, so this is why all the richest men in Babylon, you've got to understand part of all your earnings yours to keep. So if you can't save 10, 15, 20% of every check off your gross income, don't even talk to me about investing, because that you're missing your skippy step, because you're still trying to get return, because you don't put away any money.
Okay. So what are the thoughts?
And the less than you make, let me finish that thought. You got to spend less than you make. You got to pay yourself first. You got to spend less than you make. So if you can't do that, that's the start to everything else starts from that path. And then there's a few things after that, but that's the foundation. So that's what I help people do, is build a foundation, keep more of what they make. And because your financial plan precedes your business plan or the investment plan. So I help people build guardrails so they can never go backwards. And then once you have those set, and they can be concurrent, it doesn't have to be They can be concurrent, but then you're looking at are you reading? Are you getting coaching? Are you whatever so that you can
Okay.
know how to invest?
Okay. Okay. So the 5 strategies, there's 5 things they have to do first before they get to the point where they can even consider investing. And are those 5 things standard, or is it tailored towards a specific person's needs?
It's standard because principles are principles, right? They don't care. Now it is both. Actually, the answer is both, right?
Okay.
Everybody's starting at a different place, but the principles are the same. So I'll just give it to you real quick, and we're gonna go down one of them, but I want them to know what they are. And so we teach this. If you go to my website, you'll see the principles and our process. But first principle is save, right? This
Okay.
is your one-page financial plan where we track all this stuff. Is save what? Save 15% of your gross income, right? And then I teach people how to do that. So let's say I was just talking to somebody before, they made, who was I talking to? 5,500, right? A month. So that's $66,000 a year. I said, well, look, can you save 15% of that? And, which was, 9,900, right? And I divided, she had a job. So I said, well, let's divide this by 26 because you get paid twice a month. And so that's 380 and some change a month, right? So now
Okay.
what I would have you do, so this is a tactical thing. I want to get tactical for a second, is set up a separate account that we teach our people to do is label it, call it wealth capture account. So your savings got to be automatic and systematic. What people do is they say, well, after I pay my bills, I'll see if I can save anything. If you do that, you will be poor because you'll never have any extra money. Okay, you got to
Right.
at the head of the line. So all we do is say, look, open up an account, go to HR, can you put 380 a check away? She goes, yeah, I can do that. Okay, well, that's step one. So when I see you this week, your assignment is to start that. So now I know you can save, right? And
Okay.
so I'm exercising that pay yourself first muscle, right?
Okay. I like that.
Right.
I
So
like
that's
that.
boom. So you don't need me. You can
Mm-hmm.
do that. So I had people that called me and they said that, and after about a month, I did that thing you said I heard you on this podcast. And it was awesome. I have more money than I've ever had set aside, right?
I
And
like
I don't
that.
mean the 401k. 401k is not saving, right?
Okay.
Saving, safe, liquid, accessible. 401k is not accessible, guaranteed, right? So you got to build up money you can touch. Especially if you're on here, you want to buy a house or you want to be a real estate investor. All
Mm-hmm.
my real estate investors, I work with real estate investors, small business owners
Mm-hmm.
that aspire to that because their objective is work optional income. So they want to buy assets and so all of the ones, especially the business owners and real estate investors, I say, look, can you make more money than Vanguard? They go, hell yeah. Well, okay. So why are you locking it up for 30 years when you need to have it where you can access it? Because if you put $1 in your business, make $2, that's 100%, right?
Right.
You buy real estate with leverage. Like, so if you want $100,000 in stock, you need $100,000, right? If you want a
Mm-hmm.
$100,000 real estate asset, you might need, let's say worst case, you need 20,000, 25,000. So, and the bank will loan you the other 2/3 of that money. So now if you had 100,000, you could buy 4 assets,
Okay.
right? So that you want leverage. There's no leverage in equities. Matter of fact, it's an illusion because the price will go down tomorrow, right? And so but that's what you've been taught to do. The second one, let me go through them fast and we'll drill down, is
Okay.
protection, right? You got to play defense, right? So while you're building this empire, this is where most of my people drop the ball. When I meet them, they don't save on systematically. So these savings got to be automatic and systematic. Then they don't protect themselves. They don't value insurance.
Okay.
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 So maximum protection is and we take them through a process where I start looking at their auto, their home. Do you have umbrella coverage? Do you have disability coverage? Do you have health insurance? Do you long-term care? Do you have a will? Do you have entities, LLCs, trust? Do you have life insurance? So I do them in that order, right?
Okay.
And so the idea of maximum protection. See, most people are taught needs and how you'll tell them how much insurance you need. So let's just go to life insurance real quick. So most people, And I'll do a real estate example with homeowners and liability. Well, let me do liability first. So, for example, I had a client. She has was making like 6 figures in cash flow. Had about 5 or 6 apartment buildings plus a couple other stuff. Young girl, like I don't think she was 30, and young woman. And she so she said, all right, I got these entities. She got the cash flow. So I'm going through her chart. She was doing pretty good. Says, well, you have your umbrella coverage, personal liability coverage. And I says, well, no, all right, you got $3 million worth of real estate. Yes, you have LLCs, but that's a limited liability company, limited emphasis on limited, right? So I said, so right now, that's not your first line of defense. Your first line of defense is insurance, right? So if you have $1 million, $2 million of umbrella coverage that somebody falls on your property, you call them.
Hmm.
Their lawyers go to defend you. And so I introduced her to a friend of mine that does that type of insurance. I think like $800 a year, $900 a year for $2 million worth of coverage, right? So
Okay.
people have little gaps in their coverage because they think it's a cost, but you have to transfer the risk because the purpose of insurance is to indemnify you, which is make you whole. So when you look at your homeowners, do you have full replacement costs? So I tell people, look, do you want half your house back or 100% should you have a total loss, right? So you've got to protect that. That is a protective expense. It's an expense, but it's protective because if you don't have it, then in your house worth 200,000, you don't have insurance. What's that guy, the football player? That left eye burned down his house.
I can't remember his name.
Andre Rising, right? He had insurance. Oh, I love my baby. All right, but now you done hit a $50,000 with no insurance, right? So now you just boom up in smoke. You're $2 million because you were dumb and not dumb enough to take $1,500 and buy some daggone homeowner insurance. That's what I mean by playing defense. So life insurance, real quick, because I know you want to talk about that. The purpose of insurance is, people say, well, you don't need insurance. So if the principle we teach is maximum protection. So what do you want to have happen? It's a want product, not a need product. So most of our people, especially, it's just who really don't go there, are underinsured because we think insurance to bury you. Insurance ain't to bury you. Insurance is, again, you're insuring you as a money machine, right? And so let's say if you're hearing this and you're between let's say 18 and 40, take your whatever you make a year, multiply it by 25. That's how much you can have. I'm not saying you need it, but that's how much that's maximum protection. So at our firm, we focus on maximum. And it's not, and I don't even talk about the type right now. I'm just talking about the principle of maximum protection. If you're over 40, multiply your income by 20. If you're over 50, times 15. If you're over 60, times 10. So now if you look at that versus what you have, and you've got kids that still need to eat, they're not in college yet, you might have charities that are important to you. See, what we do, Marianne, we got to stop dying for free, right? Stop dying in every generation is where, it pains me when I see people are with all these GoFundMes. GoFundMe is not a plan. That means you're trifling. Okay.
Okay.
And so if we should buy insurance on your parents. If you buy insurance on if they're healthy and you're in a loving family, I would have you fund life insurance, then I'd have you fund your 401k because actuarially, this is a strategy we teach called the family legacy, right? Actuarially, you're basically building your inheritance. So you buy $500,000 worth of coverage on them, they pass away because it's not if, it's when. And so now that's $500,000 tax-free money going back into the family. This is what is a book called, written by a guy I know, Garrett Gunderson, called What Would the Rockefellers Do? So they insure everybody in their family. Okay. I did it by accident because I didn't know the strategy then, because if I'd have known it, I'd have, even when I was struggling, I would have put more coverage in them because my parents were underinsured, my wife's parents was underinsured, and that would have made a big difference.
Okay.
And even what she left us, help with the kids, help with a little bit with college, not that much because we used it for stuff while they were living, but it helped do a lot of stuff. So everybody needs a windfall. and there's nobody's going to strike an oil well in your backyard. So why don't you kind of create your inheritance?
Yeah, so the reason that caught my attention because, these past episodes that I've done has been on reverse mortgages, and I thought it was interesting how heirs tend to have a problem with their parents doing that with their home because they're afraid that their parents are spending their inheritance. And sometimes parents need to do that to supplement their income. And I just kind of felt like they worked so long to buy this home in the first place and pay all these payments and send their children to school and raise them and whatnot. And now they're at the point where they want to use their home to help them supplement their retirement. And I wanted to figure out if there was a solution to that problem, that it's a win-win for everybody. So when you mentioned the insurance, children buying insurance policies on their parents, I just kind of thought that might be the win-win.
That is the win-win, because, or the parents just, but see, if you want to do that, because I've experienced that, right? So first of all, it says in the Bible, wise man leaves a heritage for his children. So I believe in legacy. That's one of the pillars of what I teach, legacy. The third principle, right, is maximum protection, legacy, liquidity, and velocity. So those are the five, right? Mm-hmm. So you create the legacy until you build the empire. The legacy is instant legacy created with life insurance, right? So now, most time if the kids are doing well, they don't want the house, okay? They want money. Okay. Mm-hmm. But there are scenarios in our community where the kids don't quite have it all together. I'm thinking of a particular case where just, it was a 40-ish something, but she was on disability and she just didn't have the wherewithal, because they don't take the house. You got a year to buy it back or refinance it. But I already knew too. My sister's a social worker. She was one of her clients, right? So it was nothing I could really do for her. Only thing I could do was help her fill out the insurance claims, because she was just mentally paralyzed. She couldn't even do that. So I did everything but basically, buy her to stamp, lick it, and put it in the mailbox for us. Put it in the envelope. I mean, but I think she did do that because she got it. Someone just should thank me, because she was just mentally paralyzed. But what if I was the reverse mortgage person, or if I'm coaching them, because I work with reverse mortgage people. So we look at the scenario. So it's never the product, it's the strategy, right?
Right,
product
right.
Is the tool of the implementation. So if you got all this equity and you're starving to death, I don't care about the kids. I care about you living the best life you can. Okay.
Right.
Now, if you want to leave the house, okay, well, now hopefully you qualify, but you got to explore. All right, well, the mortgage is $100,000. With some of this money, if you qualify, can you buy insurance, right? So you could pay that house off. You could give the money to the family so that they have the wherewithal to make the payments while they're working out refinancing, because I don't really believe in paying the mortgage off, which I think is a waste of money. And
yeah.
Right. So economically, that's another whole other.
I know. I was going to ask you to explain, but that's that's another podcast. Let me write that down.
And but you want to do is you want to, so it's all about how do you protect your risk. So if you can, because the insurance does. See, the other reason to have life insurance, we have a report. Remind me, I'll try to get it to you for your listeners, and it's called Permission to Spend. Right.
Okay.
So the life insurance. See, so what people are trying to do, let's say they're a couple, they're trying to scrimp and save because they ain't saving enough money. So it's really, the whole retirement plan thing is a joke, because you can't save enough, or they aren't saving enough so that you can retire and you're going to be alive another 30, 35 years, and you're going to live off of the money without working for 30 years. I mean, the math doesn't work. Social Security doesn't cover that, right?
Right.
So if you have other stuff, if you have life insurance, well, now you can use the money, because when, because not if one of the partners passes away, boom, there's going to be a tax-free fill up of the money bucket.
Okay.
So, you see what I mean? So a tax-free fill up of the money bucket, so you can kind of spend a little bit more money, because hey, and if it's permanent insurance, you've got some capital in there you can access. But when you die, boom, here's 100, here's $500,000, here's 800,000, here's $1 million to make the other partner whole. And now so you got permission to spend. And so insurance, there's the living benefits, there's the death benefit. And so people just don't understand insurance. They think it's a necessary evil. Rich people love insurance because you always want to have your downside risk protected.
I think that the reason people don't understand or don't appreciate insurance because they don't understand how you can use it as a tool. Average people see insurance as you get it to make sure you can go to the hospital. You get it so that when you die, you know, your children or whoever doesn't have to pay for your burial, right? But they don't realize what all can be done. And I guess I just want to, because I guess we need to wrap it up soon, because I know you have something to do. Before we end this, is there anything that I left out or questions I did not ask that you think the viewers that I have should hear from you?
Well, I think you should look at it holistically. Like, you know, so insurance is a piece of the puzzle. And so protection comes before investing, right? Because you think about this, you're going to have one of three problems in life, right? You're going to live too long, which means you got to save and prepare for, you know, future lifestyle where you can't or don't want to work.
Mm-hmm.
Okay? You can get sick and live,
Mm-hmm.
right? But if you're infirm, your expenses are higher, you need special equipment, you got disability, you know, you have a version of long-term care when you can't take care of yourself. You can't self-insure for that stuff. You have to transfer that risk to the insurance company, or you could die. You're going to die, but you could die early and you haven't had time to build this stuff. I've paid over a dozen death claims, so half of them are under 40. Okay. So stuff happened.
Yeah.
And so you've got to look at that. And then, you know, then it's what type. That's right now, that's irrelevant. You know what the best insurance in force is? The best insurance is the one that's in force when you pass away. Okay. Now there's some better than others, that's a more detailed. We don't have to get into that, but you know, all I do is I teach term and whole life, right? And so there's a mixture of how you do that. And I really focused on the living benefits and doing insurance with living benefits, so that you don't necessarily have to die to use it. There's other benefits built in there. And then again, it goes back to not the product, it's a strategy. And it's no wrong or right. It's a tool, and you need a coach to help you figure out the proper tool, because they're not all created equal. And that's why they should call me.
Absolutely. Absolutely. Do you have something you want to say to the younger audience, the ones under 30?
Yeah. So I just did a podcast that's on my YouTube channel saying 10 things I would tell my younger self.
Okay.
And so that's a good, you know, a primer of stuff I learned, because I've been doing this a while, and half of my career I was giving misinformation because I was doing what the industry told me to do. Okay. And so what you've got to do is you've got to stop. Here's the basic premise. The rules so in personal finance, they teach this, right? Buy and hold, dollar cost average, guided debt, buy term investor difference, right? But if you took a corporate finance course, they don't teach any of that stuff. They teach about velocity of money. They talk about leverage, right? They talk about cash flow. They use insurance as a permanent insurance as a major part of those plans. And all I do and what I've discovered is that all of those things in the corporate finance work in personal finance, and they're safer, and you have less risk, more control. And so my mission is that once I found out about it, I'm pissed, and I'm trying to tell everybody that will listen, hey, there's another way to play this game that gives you more control, more safety, more liquidity, use control of capital and cash flow, if you're willing to learn how to play the game. So I encourage people, read a book, you know, email me. I have a recommended reading list. You can email me at curtmay@gmail.com. I'll send you my recommended reading. And so young people, you need to pick up a book. You need to listen to a Jim Rohn video a day. You need to get Audible and listen to two audiobooks a month. You need to read 12, 15 pages a day. Remember, investing is about becoming something. So what do you want to become, right? You want to be a real estate investor? Then you've got to learn, because if you say, I want to be a real estate investor, there's like 15 different ways to make, if not at least, to make money out of real estate. I got clients that do short-term rentals, long-term rentals. I got clients that make $100,000 a year doing Turo, with their renting out their cars.
Okay. I've heard of that.
Machines. There's all kinds of stuff. So this is the kind of stuff that we talk about the show. So I'll say, young people, listen to keep listening to Marianne, add my show to your rotation.
Mm-hmm.
And because we overlap, because what I teach complements what she teaches, right?
Mm-hmm. Yes.
And so you got to learn, and when you hear books, The Richest Man in Babylon, Rich Dad Poor Dad, Rich Dad's Guide to Investing, Lifestyle Investor by Justin McDonald. Justin McDonald, there's stuff out there. And so you got to educate yourself. The number one asset is you. Last comment. Your number one asset is you. So you got to work on your mindset, your skill set.
Yes.
And your network, right? Skill set. What you watch, what you read, who you hang around, what you listen to. That's everything, okay? Your skill set, because if you don't make the kind of money you want to make, that's because you don't have any skills, right? You don't have, because money, people say, well, I need to make more money. Well, money is a result of serving people.
True.
So the question is, you should be asked is, how do I serve more people, right?
Okay.
How can I create value in the marketplace? How can I solve a problem for somebody else? So you've got to think in terms of not me. What I need is like, what value, how can I be of service to other people? And the result of creating value for other people is money.
Right.
So we don't, what comes first, the chicken or the egg? The chicken, right?
Right.
Value, and the money is the egg that is a result of that. And so a lot of people just don't understand money. And so therefore they're chasing. They think it comes from the government. They think they need to get a pay raise. They think Congress needs to raise minimum wage. You can't legislate success. You've got to learn the game, take control of your personal economy, and make yourself more valuable by reading, studying, getting around successful people, and stop getting around people. Woe is me. I was talking to somebody on the show last night. I said, we're still in the recession, and what do people do? Oh, what? No, we're not. What are you talking about? And I made more money, not in recession. We're still in COVID, she kept saying. I said, I made more money in COVID that was like up until the year after, that was like one of my best years, because I decided that, okay, while people are sitting there in fetal position, sucking their thumb, Curtis is going to attack. Curtis is going to charge. Curtis is going to make money, because I decided to take control. I've always taken control, but I decided not to let all this hysteria derail me. So that's why you got to keep your own counsel. You got to get off the TV.
Yes.
I had Myron Golden say, listen, if you're not making at least $50,000 a month, you don't have no business having a TV in your house.
Well, now, wait a minute, Curtis. Wait a minute. What about okay, I get what you're saying. And I was getting ready to say, what about people who don't make that money because they can't afford entertainment outside of their home? They watch TV. But the point is, you're saying that there's always a way for you to improve your income and yourself. You just got to want it.
You don't need to be entertained. Your ass needs to work. You don't need no energy. My kid's like, well, Dad, you just eat such and such. No, I work. Okay? We spend. So rich, I just put on YouTube. It's like rich people. Jim Rohn said, wealthy people have libraries or studies, and middle income people have big screen TVs.
See, listeners, this is what I'm talking about. Okay. Now, we done talked about everything. I know you need somebody to go ahead and kind of break down what all you learned today, because it was a lot. Okay. We've learned that there are businesses out there, ways that you can improve your income if you learn, if you read, if you change your mindset. We also learned that there are so many things that you can do with insurance. Insurance policies, so many tools. What else did we learn today?
And listen, I hope I pissed somebody off.
Yeah, or at least inspired them, you know.
I'm trying for both, but because you need to shake up your paradigm. Because there was a quote I just read somebody for a call. I was working with a client, and there's a quote out of Richest Man in Babylon said, "If you have not earned more than a bare existence since we were youths, you look at your bank account. You've been working 20 years.
Okay.
It is because you failed to learn the laws of the acquisition of money, or you do not observe it."
Okay.
So because you have to take responsibility for where you are. It's not the government's job to take care of you, and your mom's job to take care of you. Guys, it ain't your girlfriend's, your wife's job to take care of you. You need to even when y'all get together, I tell the young people this, you gotta be equally yoked. You need to come together strong, right? Not one carrying the other one. And then together you can march forward to prosperity, right? So you got to have a prosperity mindset. You got to think, you got to move. Most of us are stuck in scarcity. And so we think that if I win, you lose, right? But if you're thinking in terms of prosperity, you understand there's more than enough for everybody to have more than enough. And that's the number one problem I see. They're stuck. They hear all this socialist nonsense in school or on TV. That every time you watch TV, you know who's the bad person, the criminal, the businessman. Okay, you only make profits if you're creating value in the marketplace, but you're being subliminally brainwashed and programmed to be poor. Our tax code is designed for landowners and business owners, so you got to know the game.
Yes, you're right. So, but Bo, you know what? I do want to ask about one more group because we talked to the youngins. Now I want to talk to the people 55 or better. And I want you to not be so harsh, okay? What about those who have, I see your face. I wish y'all could see it. What about those people 55 plus who they didn't understand? They did not know anyone like you. They weren't taught to manage their money or building wealth. They were taught to do things the old-fashioned way. You work at a job for so many years, you get a pension, you get Social Security, and now they're learning that that's not working. What can they do? I mean, they're getting older, but can they find a way to build money and then still invest at that age, even though they didn't do it years ago?
Yeah, sure. So there's a saying that some say it's a Chinese proverb, some say it's an African proverb. I'm going to go after, of course. The best time to plant a tree is 20 years ago or today.
Okay.
Right. So go forth and sin no more. Right. So pay yourself first. Right. But what happens is
okay.
But you got to change your. So I have a client right now that they came to me through one of the real estate coaches I talked about. Right.
Mm-hmm.
Late 50s. Maybe you have 50,000 saved, not even 60,000 in qualified plans, right? So I do a little exercise. Y'all call me and I'll take 10 minutes to go through it with you, retirement ready or not. And I'll answer the question, how much you need to save to have the living future like live today, what's the rate of return you need to get, how much you have to lower your standard of living, and to make your money last. And we'll answer those questions in like 15 minutes. But what I told him is you have to shift what you're trying to do, because you can't save enough money to do that. But you don't need to save enough money. What you've got to do is you've got to learn to buy assets, right? So I said, listen, what do you need a month? He's about $5,000 a month. I said, okay. So if you could net $400 a month on a rental, how many you need? 12. Right? So could you get with somebody like Marianne or a realtor? You change your asset class from the stock market to buying or building assets. So
right.
Learn how to do that.
Right.
But guess what? Maybe it's a little bit hard? I don't know. It's relative, but you know what is easier than being broke, right?
Sure.
So you've got to do something that's something that you can do. You've got skills. You could do. I have a guy that's from Philly, up your way. He grew up in Germantown, and he's it's a show called The Black Entrepreneur Blueprint. Not Jay Wright, Jay Jones, right? And he talks about this. He's got a book called The New Black Wall Street and e-commerce.
Mm-hmm.
You know, I got a woman I was just talking to. She got like 3 children's books. I says, all right, same book, 59
Okay.
up and saved. So I spent my last meeting with her. She's in my personal prosperity, practical personal prosperity program. So I said, okay, we're going to spend this entire meeting fleshing out your number one asset, which or how to generate revenue with these 3 books you got that you're not really selling. That I think that by this time next year, she can be making 10 grand a month.
Okay. Okay. Oh, wow. That's pretty good. So wait, you were able to help her figure that out?
See, what people don't get is, like, in business, I'm in the marketing business, so I understand. See, my income went up because I understood you got to learn how to market, you got to learn how to sell, and selling is not convincing people to buy stuff. That's why y'all making money. You got to sell something, right?
Yes.
It's 6 things you can sell. You can sell. So that's the answer, guys. You got to sell something. So what can you sell? Your physical products, your digital products, your services. She has a physical product that she's not selling. Right? You can sell somebody else's physical products. You can sell somebody else's digital products, or you could sell somebody else's service. I showed her how she could sell her products. I showed her where she could go online and get some ideas to create workbooks. Or after you sell the product, you've got a course you could create to sell. I showed, we talked about who, because her thing are about financial literacy in the Black community. I'm gonna bring it on my show. And which I think is a big deal, talking to grandparents. I was like, okay, so who needs to hear that? And what's the problem that you're solving? Not the book, but what's the result of that you're trying to accomplish? And then who could benefit from hearing that? So she wasn't thinking about none of that stuff. I spent an hour over that with her, and I'm gonna follow. I said, look, here's what I want you to do. Like, email me this Friday, and I need you to do this and this. Just 2 things, 2 implement, and next week we'll do something else. See, most people hear stuff like, if you like after the show, what the thing I said you could implement is create a separate checking account and draft 15% of every check and do that. So if you don't hear me again, if you do that, that's the start of the game. Paying yourself first. Part of all your earnings yours to keep. So that is the action item from this show. So now you've heard it. I've just reiterated it. And if you don't do that, guess what? You don't want to win. And typical financial advice is not designed. That's not what their objective is for you. Their objective is not to make you rich. Okay.
Right.
It's asset under management, right?
Right.
It's, how much can you say that we can charge you fees for the next 30 years? And that's not the goal. The goal is you've got to learn some stuff, and it's not complicated, and I'm saying it kind of harshly because I want to smack you.
I'm smacked. I feel it. It hurts. It hurts.
Excited because there's a solution. So you should be excited.
Yes.
Because y'all all know how to do stuff.
That's true.
And you don't think it has value, right?
That's
and so
true.
There's people that make, I go to stick in Funnel Hacking Live. This woman's making, she was decorating cookies, turn that into like a $2 million business.
That's true.
She was decorating and then turn it into a course teaching people how to decorate cookies and cupcakes. I mean, it's all kinds of stuff out there. World's full of people, ideas, and money.
I've heard of many success stories like that. Yes. How can our listeners get in touch with you?
So if you go to one, I would have you, if you're on IG, go to find me, curtmay 4766. Just go to my link tree, right? And I'll have a link to my shows, a link to my website, which is practicalwealth.net, right? My firm is Practical Wealth Solutions. So you can search for that Practical Wealth show on YouTube. I'm going to give your listeners as a gift, I'm going to give you a web site for that you can put in your show notes that'll have like my report, the value of liquidity.
Okay.
Link to the show. I'm going to try to find that thing because I don't have it in the link, the permission to spend for some of your older clients. And so if I don't get it to you, then they can email me at curtmay.com and I'll send it to them directly.
Okay, wonderful.
Yeah, and I'll send that to them. I think you'll find it, very helpful and very interesting.
Okay. And I'll make sure that all this information is in the show notes. Also, do you have a list of books? Because you always mention books that we should read that should, help us train our minds. So what do you have a list, and I can go ahead and
I don't have it in a page yet. I'll probably work on that today. But if right now, if you email me and say, I heard you, tell me where you heard me, and I will email you. I have a couple different lists. So I got business lists, I got marketing lists, I've got just overall financial lists where I've got them broken down. And I got to update them because I probably read 12, 15 new books every year.
Okay. Okay. Okay.
Because what did they say? Look, we're gonna have something from a black man. Where you put it in a book. So I decided that that's not gonna happen to Curtis.
That's right.
You gotta always be green and grow it and working on your skills.
When are you gonna write your book?
I'm actually working on a book. So on the banking thing, it's called Money for Life, and so I know the author. So I'm actually he gave me the last of his book, so I'm going to have a website up next week for that. So just follow my page, you'll see it, and then I'm going to co-author that book. So it's my favorite book on the whole banking concept using life insurance, and kind of. And then the other one is called, I have an article somebody did on me at Forbes. It was called The Path to Lasting Wealth. I said, that's a good book. Right? And so there's some other stuff, with the principles that we've been talking about, what I've seen actually doing it. Like I work every day with 3-4 clients a day. So, okay. And just kind of putting down my thoughts and what I think are the solutions. And, we've got a whole program because it's about education. So I can't, I have a program because I think it really takes like a year to kind of change your paradigm about money. So I agree. Yeah, it does take time. So I realized that I said, how can I help people, really help people more than just something? I need to kind of, I do weekly study group calls with our clients. I do, once a month, I do educational webinars with our clients on how to use the stuff that we set up for them. So we if you're on my email list, which if you, here's another one. If you text Be the Bank to 55, all caps, all one word, to 55444, I'll send you our report, the Creating Wealth Using the Velocity of Money. Okay. And that's how, but I also get you on my list, and then you'll see the education we send out, and the things that we do, and Curtis will be in your ear every week. And there you have it, folks. What an insightful conversation we had with Curtis May. I hope you found Curtis's expertise and practical advice as inspiring as I did. Whether you're a homeowner or a first-time home buyer or small business owner looking to navigate the financial landscape, Curtis has provided a wealth of knowledge to guide you on your journey. As we conclude this episode, remember that financial well-being is a continuous process, and taking control of your finances is the first step towards achieving your goals. Curtis has shown us the way, and we encourage you to explore the services further if you're seeking expert guidance. A heartfelt thank you to Curtis May for sharing his wealth of knowledge and providing us with valuable insights into financial planning. And to our dedicated listeners, thank you for joining us on this enlightening episode of MH Knows, or She Knows Someone Who Does, Unlocking Real Estate Secrets. I am committed to continuing this journey with you, bringing you more real estate and financial wisdom, and introducing you to experts who truly understand the intricacies of their field. If you found today's episode valuable, please don't forget to subscribe, rate, and leave a review. Your feedback helps me continue to provide you with quality content. Until next time, this is Marianne Holt signing off and reminding you that when it comes to controlling your money, knowledge is the key to your success. Stay curious, stay informed, and remember, MH knows, or she knows someone who does. Take care.